Welcome back to Commercial Financing Experts Academy. My name is Stuart Truong. Hey, today I want to talk to you about commercial financing in general and why folks should look at commercial financing and how you can be able to get your clients on board, or investors especially, to look at commercial property. Let's look at about a few things that I find differentiate between commercial and residential. Why moving forward in this regulatory climate, commercial property will be the best way for your investors, okay? Namely, government intervention. So, with government intervention, what's happening, as you can see on the residential side today, is that it's getting more and more difficult to finance residential property, specifically refinance and investors that own multiple property, 5, 6 or more. If you're a residential mortgage broker in Canada right now, you're going to have a tough time moving forward, and the government's probably not going to make it easier for us, right? It's going to make it more and more difficult. So your investors will be getting decline, and therefore your incomes go down. Do you want that to happen in your business? I highly doubt it. I don't want that to happen in my business, right? So my question to you is, what are you doing about it? Your investors are buying residential property and you're being faced with this kind of issue. How can you overcome that? My suggestion is this: look at what's in the best interest for your client and suggest the right thing for them to do, right? If residential property is getting so much regulation that financing the next property will be very difficult, consider looking at on commercial side, right? In a commercial world, it's all business law, and then we have not seen any major changes probably in the last 50, 60 years in the commercial side. On the financing side, there has not been any changes amortization wise. Yes, of course, pricing will go up and down just as it does on the residential side, but as far as regulations and requirements, it has been the same with all the banks that I know of and that I've done business with across Canada, right? They haven't changed much. Regulations on the government side, not much. Residential side, your clients have a residential property and they are renting it out to tenants, right? So what happens when the tenant vacates the premise and has damages? What do you do? Who ends up paying for the damage? The landlord does, right? Your client ends up paying for the damage. Yes, the damage deposit they made to keep, but chances are that half a month's worth of rent towards damage deposit is not going to cover this. They put a couple of holes in it, it's going to be way more than what they left behind. And the cleanup, not to mention about the cleanup. You know, if they're hoarders and the cat lady kind of effect, why? It's going to cost you several $1,000s, and there's only about $500 or $1,000 as a damage deposit. They're in the hole, right? On the commercial side, the tenant pays for any damages. The tenant pays for any renovations. That's another thing I didn't touch on. So in renovation, when they move in, tenant improvement is what we call it on the commercial world. Tenant improvements are paid for usually by the tenant when they move in. Whatever you want to do, you want to paint the wall, that's up to you. You pay for it, Mr. Tenant, right? Under a commercial contract, anything you can do as long as you pay for it. And within bylaws, right? You have to have the bylaws. The city has to give you a permit to do it, so everything's done by the law within the municipality, right? Whereas residential, you have no idea. They might do some change alteration until you find out too late later, right? What else is there? Oh, when they do not pay, how long? Can they kick them out? Yes. It will probably take between 3 to 6 months to kick them out if the owner, the landlord, your client, doesn't know how to work the system. Chances are those guys know how to work the system better than the landlord in most cases, right? So they're out of pocket for 3 months, no money. Well, even in a lot of cases, you see it on the media that the guy is still staying on the property for 6 months. They can't even kick him out, all right? Whereas on the commercial side, if there's, within a short period of time, if they don't pay up within 5 days, whatever their late payment they have to pay, you can literally kick those people out within 20 days. Matter of fact, they can even lock up the door, liquidate, seize assets, get the bailiff in there, seize the assets, and liquidate it and get your money. Yeah, you can. That's commercial. That's business law. Yeah. On residential side, guess what you have to do with all those stuff? You have to store and put in storage for 3 months. Yes, you have to do that for your deadbeat tenants that are in British Columbia. Other provincial rules and regulations may be different, but I think they're very pro-tenant in most cases, right? What else is there you can consider? Well, if your investor is looking for long-term growth and passive income, well, let's look at the word passive income. Passive means I don't have to do nothing. I do squat as a landlord, as an investor, right? On the residential side, it's not passive when your tenant calls you at 2 in the morning that it's, there's some issue in the house, either it's flooded, toilet overflow, any kind of stuff. You know, light bulb's broken, I can't replace it, you got to bring in the new light bulbs to replace it, and it costs you money, right? Even if you're a property manager, it costs you money. Look on the commercial side. What's the difference? Commercial side is everything is well, let's look at commercial, right? On the commercial side, number one, not much regulations. Number two, tenant pays. Number three, property manager having a triple net lease, tenant pays everything. Tenant pays for a property manager. Property management, the tenant pays for it. They don't have to pay for it, right? So really, it is more truly passive on the commercial side with commercial property than it is on the residential side. Why would you want to do all that work when you're looking for passive income? They should be looking at commercial property, right? Everything is covered from property tax to strata, the strata fees, maintenance, property management fee, all inclusive. Utility, that tenant pays. Whereas here, utilities and everything else, your landlord, your client, pays. How about rent? Well, rental income here is dictated by who? By the province, right? By the provincial government. Another regulatory issue. Right? Over the commercial side, 5 to 10 year leases, and it goes up every year. Who wouldn't want that? I definitely love it, right? And my properties anyway. Over here, the increase is very negligible, between 3 and 4% so far in the last few years per year. So if you got $1,000, you can only increase it by 30, 40 bucks. Jeez, inflation is gonna outstrip that sucker. I can guarantee you property tax will outstrip that increase, right? Yes, it appreciates over time, but that's a different story. So over that side, it's a 5-year, 10-year term lease. It goes up every year. Who dictates the increase? The landlord dictates the increase. What percentage? What are they going to agree on at the beginning, right? So I've seen some gone double between the first and second year, but normally they will go up about 10, 15, maybe 20% the year following afterwards. So in the 5th year, you pretty much double, or at least coming close to 25 to 50% of the original rent, right? And they cover everything. This is truly passive income. All the expenses taken care of on the bottom line. Right? Financing. We already talked about all these issues here with the financing side. Well, the financing is a problem because a lot of the lenders are now are only allowing you to add back 50% of the rental income for the rental property, right? On commercial side, they use a different calculation called DCR, debt coverage ratio. I'll go into it in possibly one of future videos. But right now, the difference is day and night. Over there, you're talking about between 75 to 80% rental offset versus a 50% add back. Right? Think about that. Think about for a minute. Which would you rather take if you were the investor? Right? If apple to apple prices are comparable, chances are you can get a $3 million commercial property that will cash flow, whereas a $3 million residential property in Vancouver or Greater Toronto area will not cash flow. Right? So that's something to consider. The other thing is that when you have the rental income on these property, it's difficult to finance. and they use your personal income, your personal liability, you got a car lease and all that stuff, that's going to affect the investor to be able to borrow more money on the residential side. Whereas on the commercial side, it's all about the property. The covenant and all the tenants and everything on there is on the property. Your personal income is not a big concern to them as well. Right? Not to mention the down payment. That's another issue on the residential side, the down payment. Where's the down payment coming from? Is it coming from a line of credit? If it's coming from a line of credit, we got to service that debt, all right? And if it's coming from borrow money, borrow how much? Friends, families have to be gifted, right? On the commercial side, it doesn't really matter. If it's coming from personal line of credit, they don't have the debt service that sucker off. Why? Because they're lending towards the business enterprise, the business entity. It's a separate entity, especially if you put it in a holding company. It's separated from your personal side. Your personal liability it no longer applies. So on the commercial side, everything is so much simplified. The reason being is that when they are going after commercial law, business law, and they're financing the property itself and what the property cash flow. So it's more important to see what's inside this property, which is the tenant, than your own personal pocketbook and what income you're making. Right? The down payment could also be partially from a vendor financing, a vendor take-back. In those scenarios, actually, there's more, especially selling a property with a business involved, the lender actually is pro vendor financing. They would love to see the vendor take a part of the financing. There's a vested interest that the success of the business is going to continue. And the vendor will most likely help to make sure that the new owner is going to succeed in that business, right? So financing, even though they're only putting down, say, 15% and the vendor putting down now 10% financing, that's 25% down. Can you do that on the residential side? No way, Jose. Right? They're not going to let you do that. Why? Because to them it's a risk. Because it's more debt. They have to pay both the lender's money every month and the vendor's money. They don't look at it that way at all. That makes common sense to me. I don't understand why the residential side is such a challenging when it's common sense, right? So if you really want common sense financing and you really want to grow your business and not be affected by outside rules that is not under your control, government intervention and all these other issues, especially your investor, if you have an invested interest in your investing and making them, helping them make the right decisions and get them the right kind of financing and also add your value, increase your value, consider taking my course, commercialfinancingmastery.com, right? Have any questions? Just email Sue at Sharing Bank Secrets, and if you like this video, you learned something from it, hit like and subscribe to the channel. You get the future videos automatically. Take care. Look forward to seeing you at the top.